Right. Good evening, everyone. Here we are, mid-March already. Can you believe it? Pretty much a year today, isn't it? We all went into some ridiculous lockdown, and yet we find ourselves still here. But I guess what? Hopefully, some of you have seen the crypto picture I put up the other day. Again, a year ago. Can you imagine if we were back in that market now? But it is cycles. We will see those sort of dips again. And I'm sure if you hang around in this group long enough, you will learn when we will see that again. So tonight, right, it's typical. I always struggle to think of what I want to, I always have so many ideas about what I want to talk about on these meetings, because we do them once a fortnight. We may end up doing them more often, if I'm honest, moving forward with a few different other things, because there's so many little things I like to talk or want to talk about, and always find I never know which to pick. And then all of a sudden I settle in on something and I start putting it on paper. And then at the last minute, the past half hour, I've thought, oh, I want to talk about that. Oh, I want to talk about that as well. Oh, I want to put that in as well, or at the end. So all of a sudden there's half a dozen kind of juggled slides at the end of things I want to kind of discuss and just not have as open topics. And to be honest, that's how I like running these. So hopefully it comes across like that it's not maybe it's as formal as some, but hopefully you get a lot more gems from it, because I'm throwing the things which are relevant in there sometimes before anybody else. But I'm going to start with disclaimer. Gone very formal on the disclaimer now. And basically it is just that nothing that I say, and this is financial advice, it's my own opinion on everything. Just tidying up a lot. Not that I've ever stepped over any of these boundaries, however, and I always thought I was talking to adults in these groups, but it appears that some people potentially view it differently. So just to reiterate, it is all my opinion. And if you want that is from the FCA guidelines regarding this, regarding these type of activities. And as poor little Jack says in the top left-hand column, guidance, that is very much where I fit in, not in the right-hand column, which is advice. I can give options and opinions, but never tell Jack what to do. Typically, we've got nobody on here called Jack, but that's where we sit with everything that I do. So what we're going to talk about tonight, right? We're going to give you a quick little intro to the new site, okay? And what I mean by that, we've just put everything in one place, okay? So I'm going to give you a quick little intro to that. It's not ready yet, but effectively it will make everything look so much slicker for you. So if you want to see what I've spoken about in one of these events, you just go to that one place and you no longer have to search through the Facebook group. This Facebook group will never end because it's a fantastic tool, but it just it centralizes all the resources, from book recommendations, from, the stock the stock picks, which I'm making. I've got to be careful with my language these days as well, and a few other things, but I'm going to give you a quick little look at that. Then, Tasha's on. I've put missed the A off your name there, Tasha. She's going to do a little. Now, Tasha and I had a little conversation this week about. We've got to cover crypto, and I want to talk to you why I'm always talking about crypto again, but I'll cover that at the end. But she's going to have a little quick talk about crypto and what I would always refer to as some of the lower cap things. So the ones which you should have a small percentage of a portfolio potentially allocated to. Call that 20 or 25%. Things which may make a rapid, huge 100, 200, 300, up to 1,000% gain. However, could very quickly go a lot lower, but their risk to reward is potentially there. But with the analysis that she's going to go through tonight with you all, it'll allow you, instead of just gambling by picking low cap cryptos in any sector, to actually target the ones that you want. Two of the ones that we spoke about today, Tasha, if you're on there, I think I've both done in excess of 20% today. Which ones were there? And I'll just remind myself and remind everybody on here. So this morning we spoke about Anchor, which rocketed to up to 22% today. It's now only down to 6%, so it's spiked up. Ada, those people who are in Cardano, one of my old picks, that's done an 18% today, and Luna, another one, 21%. So these smaller cap, never go all in on them, but that's what I refer to as small cap. I'm going to talk about EIS schemes. Now, it's interesting. Howard, who I think is on this call, Howard was talking to me about EIS, and it's one of those things, it's like the law of attraction, isn't it? Like buses. All of a sudden, Howard and I were talking about EIS schemes, which I'll mention, and then And I didn't really know anybody else invested in them. And I came off the call with Howard, and then it seemed that everybody around me had an investment in some EIS scheme. And I was like, holy crap, it is literally like the law of attraction. As soon as you start thinking about it, all of a sudden they're everywhere. Few notes at the end, and then I've got this month's swing trades, something I did in January. I will give you the stats on that. We're going to give you a few more. So I'm going to stop gobbing off, guys, and I'm going to just give you a quick little intro to the site. So if I just quickly stop sharing, let me bring this up. Let me bring that over there. Sorry, I'm just talking to myself. Screen share there, and basically you will all get, and here it is. So it's not live yet. We'll be live very shortly, and you will all simply get a login for this site. But basically, as you see, it's just centralizing everything in one place. I hope you think it looks slick. Kane, thank you publicly for this. He's put a lot of time and effort into that. But you'll all have access to every one of these areas as part of this. So it's how to store your crypto. It's how to store, where to store it, what to do with it. My investment predictions. Okay, so they are. So again, we're regularly asked where these are. So instead they'll all be collated here. You can simply click on it and you can go through it. This was the last lot I did, or this is kept very much up to date. And it's quite interesting when you look at the statistics, which we'll talk about. I'm not sure how to close that panel down on the right hand side, but you can see, so from, recommendations going back to June last year, those of you new to the group, with target buy prices, sell prices, all investments which I was making myself. What is quite interesting is Kane's done the statistics on this. And if, for argument's sake, you invested £5,000 in every one of these picks, okay, you would have spent a total of 105,000. But there's your return figure, okay, since June last year. So they're not just, and so if it hit the max target, 416, which a lot have, down that. So as you can see, all collated into one place. But yeah, not a bad return there from 100,000 if I'm brutally honest. And obviously, if you're only putting 1,000 in, or if you're only putting 100 in, you can scale those numbers down. So you put 100 in every one, you would have walked away with 40K. All the Zooms will be collated in here, so you no longer need to search for them. And also, we're currently doing a bookshelf of all investing books. In fact, here's the whole bookshelf. So all book recommendations I ever speak about will then be put in here with hyperlinks to them, if that's something that you wish. And then other resources that I use and talk about for my investing, with little video explanations of every one. So that's an intro to the new site. What we're planning to do is everybody will move over to this. When I say move over to this, you'll simply get a login for this, but you'll have to register your details on that. We're hoping to do it in the next few weeks. You'll basically move over everybody onto this as of one date. All of your payments will go through here, and it'll just be very, very much simplified. But we'll collate that information, how it'll all work, on both an email to people first, and then it'll be prompted on the date into the Telegram group. But as you can see, where we're moving, the advances that we're going to make in this are phenomenal. And obviously every Zoom link is, again, rather than people missing it, will always be on this site for the next one. So I hope you'll agree with me by saying that looks bloody slick, and it will work it does work a treat, but you can see once that is fully up and running, it will make life a lot easier for you guys. I think we're frozen there. Right, so first off, I've introed the site. Tasha, I'm going to introduce you now. Tasha, I put Tasha on the spot with this. So I'm going to tell a little story. We had a chat yesterday, and as I was very impressed with the research that she'd done into them. And I said, tell you what, this is what I put this group together for. It's not just me to gob off to you. This is a great mastermind. There's some great thinkers in this group. And the work and research that she's done is phenomenal. And I said, I'll tell you what, why don't you do a presentation of what you've just told me to the group tomorrow night? And she was like, oh, you put me on the spot. And it was exactly that. She said to me today, took her out of her comfort zone to do that, to put her on the spot like this, to present to you guys. So as I say, I am sure she will get the information across like she did to me. So Tasha, thank you so much for putting this together for us tonight. And I'll give you the floor, really. You've got the screen share. You talk about your stock picks, and I will quiz you at the end if there's anything to talk about. So the floor is yours.
Thank you. Hi, everyone. I thought I'd give you a background into myself first. So I'm a qualified accountant. I've been contracting for 9 years, worked at Barclays.
You're showing your presenter view. So if you just use swap displays, top left hand of your screen, it'll put them in. Do swap displays, and then it'll.
Yeah.
Perfect.
Qualified accountant, been contracting for over 9 years, worked at HSBC, UBS, London Stock Exchange, and I've even been to Sweden to help Spotify get ready to list on the New York Stock Exchange. What have I been doing? So my crypto rabbit hole journey started last year, October, and I took the plunge on the 1st of November. So I bought some crypto on the 1st of November. But it was really, really hard in that it's just a big, big rabbit hole. There's so much information and it's just a whole new world. And I've been able to kind of come up with my own system to help me become comfortable with investing in the different currencies. And by doing that, all the currencies I've invested in have done from 150% to some of them have done like 1,400% since I invested. So I'm quite happy with the way that I pick them now. And I'm going to be annoying like those people on YouTube and say, this is not financial advice. This is just my opinion, and take it from there. So I thought I'd give a background as to how I do my research first. So what I do is I look at all the cryptocurrencies as projects, and they all work just like the stock market in different sectors. So you've got artificial intelligence, you've got gaming, you've got finance. Can you guys see my slides? Yeah, okay, good. And what I do like about the crypto space, it's very collaborative. So a lot of the projects actually work together in partnership, and this helps the blockchain space thrive. When I do my research, I look at the teams, the investors, I follow the money. This is basically where I mainly start my my research, is who's put money in. I look at Twitter, Telegram, and some of the crypto news. So for the team, I look at LinkedIn and the crypto project's official website. And these are some of the heavy players in the crypto space that invest in these projects. Crypto news I can get from Crypto Telegraph. You can use their website, and they also have a Telegram channel. And the reason why I like the Telegram channel is because you're busy at having, about your day, and you'll just get the messages on your phone of like current news in the crypto space. You've got CoinDesk, Crypto Differ, and then YouTube. I'm not a big fan of YouTube because anyone could put a video up on YouTube, but this Coin Bureau channel is very good. It gives good explanations of the projects. And then CoinMarketCap is a good website that tells you what up and coming events each project has. So whether they're about to launch their blockchain, stuff like that, updates that they're having will be listed on CoinMarketCap. I also use Twitter. I follow the projects or the crypto's original official pages. I use a $ to search a particular crypto. So let's say I was looking for Bitcoin, I would do $BTC, and I'd scroll through to see what everyone's saying about Bitcoin. And then also on Twitter, I follow a lot of the Maxi accounts. So you've got people that are just obsessed with particular cryptocurrencies, and they also give like updates and stuff on what the projects are doing. So for, let's say, RSR, on Twitter, they have the RSR Rangers, and they always provide updates. And then I also look out for Ask Me Anything. So on Twitter, on the project's official page, they will let you know if they're going to have an event where you can just basically go along, whether it's via YouTube or in the Telegram channel, and you can get to speak to them and ask them questions. In Telegram, each project has their official channel, and they have an official channel, an announcement channel, so you'll just get announcements of updates they've done, and then you'd also have like an unofficial channel where you can talk about price action on the coins. And then, as I said, Cointelegraph has their own channel on Telegram. You have Discord, Reddit, and GitHub. GitHub is where developers that are creating software, all their coding is listed and stored. And then Clubhouse. Clubhouse is a good tool too. I like it because when you go into the Bitcoin rooms, they don't want to talk about anything else apart from Bitcoin. And they tell you it's always good to look for the good case and the bad case when you're investing, and they will let you know the bad case for every other coin, because it's just Bitcoin for them. So it's a good source to sit in and listen into what they have to say. So my first pick that I have is Reserve. They're creating a stable coin to preserve the user's savings against hyperinflation. The app provides cheap remittance as well as enabling a more reliable and robust merchants ecosystem. And I know the app is currently live in Venezuela, Colombia, Argentina, and Panama. They're currently hiring staff in Mexico to help them. And I've heard possibly they'll be going to Spain too. So RSR is used to keep the stablecoin RSV stable at $1. Again, as you can see, they have a lot of the heavy investors in the crypto space investing in this one project, which is a good sign. And then a bit of info about the project. So they currently have an active product working in these countries. They had a waiting list for everyone to join to use the app. And then on the 1st of, and they were just letting people on a little at a time. But then on the 1st of March to the 15th of March, everyone on the waiting list was loaded onto the app. And then from today, I think today's the 16th, was it yesterday? They are, until the 31st of March, they've opened the app to everyone. So everyone in those countries are allowed to sign on and get an account and use the app. And then on the 1st of April, they're going to close the app again. And then if you want to join, you have to have an invitation. So they're following the whole PayPal route of if you invite your friend to sign up, you both get $10 each. The plan is to roll out this, the plan is to have the app being used by millions of users by the end of the year. And mainnet hasn't been launched yet, but they plan to launch that this year. And mainnet is basically a term used to describe when a blockchain protocol is fully developed and deployed, meaning that the crypto transactions are being broadcasted and verified and recorded on a distributed ledger technology, which is the blockchain. It's yet to be listed on Coinbase. The reason why I highlight this is because Coinbase are actually an investor in this project. RSR is currently listed on Coinbase custody, and Coinbase custody is for institutional investors. So they are able to invest into this project at the moment. So it's only a matter of time before it hits normal Coinbase and Coinbase Pro. And there's this thing called the Coinbase effect. Like when a coin gets listed on Coinbase, the price of it actually shoots up. Grayscale have registered an RSR fund. And Grayscale are an asset management company that specializes in cryptocurrency. And they're creating an RSR fund. And also to note, Grayscale are a subsidiary of the Digital Currency Group. Oops. RSR was added to one of the biggest crypto exchanges in Korea today. It went live today. And the app is currently only on Android. It's yet to be added to iOS. And it does not have many partnerships. I list that because it's good to mention the good and the bad in a project. Is this a bad thing? I would say no. I joined the AMA last week with the founder of RSR, and they were talking about partnerships and collaboration. And he told us a story of when he asked Peter Thiel, which is one of the founders of PayPal, to introduce him to the Facebook founders, because you know Facebook are creating their own cryptocurrency. to see if they could do some collaborative work together. And Peter Thiel said no, because large companies move slow and it would cause the project to slow down. So maybe having not as many partnerships has allowed them to grow as fast as they have. Another thing to point out, the PayPal founders' original goal for PayPal was to create something like this, but they got deviated from their plan. What have I done? Okay, yeah, so that's my
sorry to jump in there, Tasha, as you were moving on. What's quite interesting is when you say the Coinbase effect, that's what happened to today, Cardano. That's why it's just done 22%.
Oh, was listed on Coinbase today?
Yeah, well, full list. It was announced today. Full listing is on Thursday. Yeah. Full listing's Thursday. So that's a perfect example of the Coinbase effect.
Yeah.
Yeah.
Okay, so what have I done? Okay, so before I go into my next pick, I thought I would talk about the history of the web. So Web 1 was, we were just consumers of data. And then Web 2 was when applications were added. So you got your YouTube and your Facebook. And then we became content creators and content consumers. And then Web 3, which they call the token economy, is where it's the next generation of the internet. It has decentralized infrastructure and decentralized applications. And it basically is a fairer internet, and it gives us individuals sovereign of our time and data. So a good example would be BAT's, Basic Attention Token, which is used on the Brave, what do you call that? The Brave internet browser, where we will get paid for our time to watch adverts on, if we choose to, on that browser. Whereas now we don't get a penny, do we, using Google and Safari? And I bring that up because my next pick is helping to build Web3. So my next pick is a coin called Anchor. And basically, they're a cloud computing platform that utilizes idle compute resources to drive the network. Anchor is a distributed computing platform that aims to leverage idle computing resources in data centers and edge devices. Companies can use untapped cloud computing power from on-site data centers and devices around the world to reduce the risk of using a centralized provider. Anchor also provides benefits for owners of unused compute power who can monetize their surplus, whether it's in the form of a device, an on-prem data center, private cloud, or even public cloud. So here you can see that they have, again, some big investors in this space. Recently, they are the #1 validator on the Binance Smart Chain. So they have #1 voting powers. And a few things validators do is they're involved in deciding whether the network gas fee should be adjusted, changing the system parameters, or upgrading blockchain protocol. And Anchor also provides decentralized staking services for Ethereum 2.0. And Ethereum 2.0 is basically an upgrade to the Ethereum network to improve its speed, efficiency, and scalability. This is the Anchor ecosystem. And also when I'm doing crypto research, I like to look at the ecosystem to see the other projects this project has partnerships or is working with. This is a good description because it actually puts them into sections. So you've got developer tools, you've got their DeFi partners, so decentralized finance partners, you've got the exchanges that this crypto coin is listed on, and you've got wallets that you can use this coin with. I thought this was interesting, so I thought I'd share it. Anchor has significantly lowered the barrier for blockchain community members to contribute to the rollout of mainnet nodes and strengthen their networks. So basically, Anchor is the AWS, but in the crypto world, and it's cheaper, as you can see here. For 32 GB, it's a lot cheaper. And this data is as at February 2020. And then I have another pick. Let me see. So before I get to my other pick, I thought I would describe, give you a bit of info. So in the crypto space, you have layer one blockchains, which are your Bitcoin, Cardano, Polkadot, they're the layer ones. And then you have layer two, and layer two is like a secondary framework to help improve scalability and the networks, how fast it is, also helps improve the fees on the network too. So your layer two chains are like Matic, Scale, and the Lightning Network. So for example, Bitcoin is the layer one and Lightning Network is the layer two. And by having Lightning Network operating on top of the layer one Bitcoin, it's making the transactions faster, cheaper, and the network more efficient. I also thought I'd describe a smart contract. It's a self-executing contract with terms of an agreement between a buyer and a seller being directly written into lines of code. The code and the agreements contained therein exist across a distributed, decentralized blockchain network. So this brings me to my next pick, which is Elrond. Now, the reason why I like Elrond is because the issues that layer one blockchains have, Elrond is a layer one blockchain and it already doesn't have the issues that the other ones have. So it's basically ready to go in terms of scalability and efficiency. So Elrond is highly scalable. It solves blockchain scaling problems, allowing for fast scaling, and it uses something called sharding. I'm not a techie guy, so I'm not techie, so I can't really go into what sharding does and how it works, but a summary is it allows the breakup of data to be stored on separate servers, hence speeding up transaction times. And this project is working on improving the speed, scale, and costs within the blockchain space. It uses adaptive state sharding, which enables the network to rival centralized cloud networks without sacrificing the security and decentralization advantages that blockchain has. Again, some big investors here. And a bit of info is that it can be used by consumers and merchants. So if you had Binance Pay, you can actually pay with Elrond now. It's working on DeFi 2.0, which will then bring the era of autonomous banking for anyone, anywhere. It's having NFTs coming in May. An NFT is a non-fungible token. You can use Elrond on Traveler, and Traveler is a website where you can book holidays and pay in cryptocurrency. I had a play around on that website last week. It was quite cool, actually. I was dreaming about going to Jamaica, guys, but you know, we're not going anywhere anytime soon. And I looked at a flight and a hotel, and the price in pounds was very reasonable as to what I would have paid if I had used an Expedia, but I could have paid in many different cryptocurrencies. There was lots of them listed. It didn't package the trip together. You had to book your flight and your hotel separate, but the prices were quite good. Elrond has a mobile wallet, its own mobile wallet that also supports many other cryptocurrencies. And it has a wallet with Samsung, a cold storage wallet, integrated into the phones. It also provides staking. I like staking because when a blockchain offers staking, it means that funds are held in a wallet to support the operation of a blockchain network. And in return, holders get rewards for contributing. And it also helps keep a network secure. But in that, the reason why I like that is then it also means that there's going to be limited supply out on the market because they're locked up. And then there's limited supply of this coin anyway. I think it has, I don't know if it's 21 million or 31 million coins in circulation. So it has a low supply. So hopefully increasing the price. Yeah, so that's Elrond. And then I can get my computer to work. What have I done? Okay, no, more Elrond. So this is the era of the autonomous banking, a multi-trillion-dollar opportunity. So this is the actual network that all of these things are built on. So you've got digital reserves, the currency that they use on it. You've got the tokens and the stable coin. You've got a bootstrapping launchpad for startups. The swap, so here you could swap Ethereum for another coin or Bitcoin. You've got lending, they do lending too. Synthetic assets, they have an interoperability layer, which is so needed in the crypto space because that means the different blockchains can interact with each other. And they have a universal interface, which is the wallet. So it's easy for people like me to use because the crypto space is quite hard to navigate sometimes. So this is usable basically by everybody. And this is Elrond's ecosystem. And this is a great, I like this picture of an ecosystem because here it puts all the projects into, you know, how it fits in. So infrastructure, these projects are actually using the network to build their projects on. You've got the validators, and as you can see, Anchor's here. I see Anchor in a lot of cryptocurrencies ecosystems. You've got payments, and then you have DeFi, decentralized finance. There's some good projects here actually that they are working with. And then this is Elrond in the NFT space. So what I liked about their NFT offering, which is different to others, is on Ethereum, unlike Ethereum, should I say, Elrond smart accounts allow tokens and NFTs to be attached directly to the account instead of recording the NFT on the smart contract. This gives NFTs and token owners true account ownership, which has clearer legal implications. Also, the speed in which the NFTs can be transferred on the network is fast. And then the fees are really low too, which is really, really good. So that was Elrond. And then we go on to Near. The reason why I like Near is because, again, it's a layer 1 and it's already ready to go without the issues that the original old school blockchains have, in that it's highly fast and scalable, and it does smart contracts, allows you to build and host decentralized applications, and then it also uses sharding. So I'm really into things that are using sharding at the moment because to me, it just means that they're ready to go. It helps to scale the network and improve the overall user experience. Their website says that it's very developer friendly, and you can basically create an application within 5 minutes, which is fast. The network is governed by the Near token, again, where participants help to keep the network safe, and then you stake your tokens and you gain rewards. Lots of big investors here. Again, you can see Coinbase is invested. So again, I would think, well, it should get listed on Coinbase at some point. So the Coinbase effect should come in here. It has a bridge to leverage Ethereum assets and smart contracts on the Near network. And it has staking. And a decentralized application are applications such as Chainlink and the Brave browser are what you would class as a decentralized application. And Chainlink, for those that don't know, is an app that is an oracle that allows smart contracts to get secure data from the real world that we live in. That's how I decipher the crypto world to this world. So data from our world can be fed into the crypto world, analyzed and used. And then the opposite of Chainlink is a project called Graph that allows you to query data on the blockchain and bring it back into our world. And my last project is, this is the Near ecosystem. Some good projects here again. So it's currently in Coinbase custody, Near. So that's where the institutions have access to this coin. So it's only a matter of time before it should hit normal Coinbase that we all use. Some general information that I thought I'd share is you get new coins. So just like in the stock world, you get IPOs, initial public offerings, you get ICOs in the crypto world called initial coin offerings. And you can get this information on CoinList or ICOdrops.com. ICOdrops.com is really, really good because it even has ones that have listed previously, and you can get to see how well they had done from the time of listing. They have all that information there. And if one is yet to list, a lot of the time they have it listed to say it's coming, or they give updates on there to let you know where you could get the coin from. So that's a good website to use. And then this website, in the crypto world, you have a thing called airdrops, where you basically get free coins from the project. And sometimes you might not know if they have done one, or they might have done one in the past that you might have missed. So if you go on ernie.fi, you put in your Ethereum address, and it will automatically know whether you're eligible for an airdrop that you might have missed in the past. And something not crypto related, but it is IPO related in the IPO space, in the stock space, is an app called Primary Bids. I don't know if anyone's used it, but it basically lists stocks that are going to list on the stock market before it hits the stock market. And you can sign up and get the shares from there. So the reason why I know about that is good old Clubhouse. My mum was ranting on about David Beckham one day, that he was releasing this new company and she can't find it on the stock exchange. And I was like, because it hasn't gone live yet, Mum. And then one day I was in a Clubhouse and this chap was going on about how he's about to get this David Beckham share. And I was like, how? And he said, there's this app called Primary Bids. So I got my mum onto it. The share was 5p a share when you got it on Primary Bids, and the day it hit the stock market, it went up to 30p. So have a look around on there. I do believe Deliveroo will be listing on that app too, so you could get into Deliveroo before it hits the stock market. So sign up. And that's it. Thank you so much.
Wow, Tasha, thank you so much. Absolutely brilliant. Absolutely brilliant. So answer some of one of the questions that came out there was, where can you get these? All of these ones that Tasha's spoken about tonight are on Binance. I use Binance. Tasha talked about Coinbase. I'm not a fan of Coinbase. Everyone has their own. I mean, Coinbase has already gone down tonight on the back of what's gone on.
Really?
It did early. Well, it was earlier on, whether it still is now. And that's my biggest worry. I'll stop. If you could stop sharing there, Tasha, I'll just quickly talk about a few other things.
I can find it. Give me a sec. How do I end show?
Stop you sharing. I've done it for you. There you are.
Great. Thanks.
So, you know, again, thank you so much for that. But one of the questions, you know, all of those are available on Binance, and remember that these are altcoins. So if you are those people who aren't in the crypto space or found that very, you know, that was quite high level analysis that Tasha did there. But the key is she's given 4 well-analyzed altcoins. So if you are looking at a crypto portfolio and you have, say, 20 to 25% to allocate to altcoins, that's where that falls. You do not go piling into one of these looking for those 1,000% returns. Now, a lot of these probably may well do 1,000%, but they also may do nothing. So you do have to be, you've got to treat them in the speculative manner. You know, they are, respect them for what they are speculative. But some great analysis there. Now, as I say, they're all available on Binance. One of the questions that Steve Curtis asked me on the chat there was to clarify a comment I made in on a Facebook post where I spoke about exiting and how I want to be pretty much, my initial exit is to be out of the crypto space fairly in its entirety by Christmas. And it's kind of this, I've spoken about this a number of times, and it's about, you know, and again, Tasha and I spoke about this today. I will probably start exiting next month, if I'm honest. And what I mean by that is I will start exiting maybe at 1% or 2% per week of the highly profitable coins. Now, the reason being is you never want to try and pick the top of a market, but you also never want to be past the top trying to get out on the way down, which is exactly what happened to a lot of people in 2018 after the last bull run. So you do want to have an exit plan. Now, the trouble with trying to get out close to the top is these exchanges, Coinbase, Binance, can't handle the volume. So look at what happened to ADA today, this afternoon. So ADA, Cardano, a lot of you are in that one. It was announced that it was going to list on Coinbase. What happened to Coinbase pretty much immediately after that announcement? It crashed. Okay. What happened to Coinbase last time? Bitcoin spiked up to 61,000 or above 60, it crashed because everyone's trying to transact at the same time. So my worry would always be, you know, you've got to have this plan. You make a plan, you execute the plan, you never FOMO back in afterwards. Okay, so make that plan. So my plan will be to start a gradual exit throughout the year. Now I may change that plan come June, July, August, depending on what maybe the chatter, like Tasha spoke about there, you'll get chatter on Twitter and places like that. A lot of the YouTube influencers in the crypto space talk about September being the end of the bull market. Now, I personally don't think that will be the case, but that's my personal opinion. But these people have multi-million person followings. Now, if they're talking, one of them's talking a specific date in September, the 18th of September. So if he's banding around the 18th of September, what a lot of his followers are going to do is probably look to be exiting around that time. So you can see that they could market move. $100,000 Bitcoin, what's going to happen at 100,000? Exactly what happened at 50,000. You're going to get a massive crash afterwards, simply because of profit taking. Now, I know we all talk about the institutional investors that have gone in, and I watched a video not too long ago about, you know, and I put a comment in the Facebook group about, you know, like the Michael Saylors, who says, openly states, I'll never sell anything, but you don't know his time horizon. You don't know, everybody has a buy price or a sell price, you would say, and he may have a model, a system, and don't get me wrong, I don't think he will, but what I'm saying is he might not, but there's many other big funds, institutions who are now buying, who actually, if they elected to sell at a sell price, it is sufficient to move the market. So what's the point of that me making this statement is, we're in a bull run. There's profits to be made, and I still see that there being a long way to go, okay? But do not think it will go on forever, okay? So have a plan, have an exit. If you've turned a small amount of money into a substantial amount of money, start exiting in a planned manner. And that's what I meant by that, Steve. I would like to be out of a lot of it by Christmas, early next year. Okay, I will leave a portion that will ride forever. A certain number of Bitcoins I will sit and let ride through the dark bear market, which will come. Okay. But also, if that dark bear market doesn't come and they just take a one-way train to 1 million, at least I've still got exposure to the market. But what I have done is I've removed that significant portion of profits I've made. What killed people back in 2018 is greed. And that's all this is greed. People will start seeing it going exponential. They'll start jumping in and they'll think this can never end. And that's kind of the boat you do not want to be in. Right. Alison, would I put ADA in speculative bucket? Everything in crypto is speculative, full stop. And yes, I would put ADA into the your risk appetite. If I'm brutally honest, a lot of people are, you know, stating ADA. You know, ADA is very good. I see a good double in ADA. Yeah. It's your opinion. You've got to do your own research on that one, I'm afraid. But again, I wouldn't have ADA, for instance. A good friend of mine, he's got ADA as his number one holding. That wouldn't be my case. Obviously, he's done exceptionally well on it today. I'd certainly have a good exposure to it. I do like it personally. I like its use case. I like where it's going, and it's safe in comparison to many of the others. Certainly in comparison to what we've spoken about tonight, it's got that safety element to it. What Tasha's spoken about tonight, those 4 have very, very solid use cases, but you've really, really got to understand them intricately yourselves. Right. Let me rattle through a few more slides for you. Bosh, bosh, bosh. Hopefully we can see that one. Right, I want to talk about enterprise investment schemes. Let's say Howard talked to me about this, and I see Howard on there. I didn't see his face earlier on. And as I say, prior to me chatting to Howard, I thought, you know, it's not for me. But my goodness, when you start delving into these, they are a fantastic tool. I've now spoken to 2 or 3 companies, institutions this week who use this, and actually you realize the breadth of them. And again, this is another. This for me is we're going to get onto some stuff later on in the tonight about, you know, where, you know, I'm placing some cash at the moment. But EIS is one of those things that know about it, store it at the back of the mind. It's more about using the tax benefits of it. Okay, so what is an EIS? An EIS is an enterprise investment scheme, and there's also an SEIS as well, which is a small enterprise investment scheme, which are differentiated by sorry, 3 million and below comes into a SEIS, above comes into an EIS for the amount that they're looking for investment. And it was brought in by HMRC back in 1994 to stimulate and support entrepreneurial small businesses really in the growth sector, forward-looking growth sector. Now, they're predominantly used at the moment in kind of the arts sector. For instance, I'm sure Howard won't mind me mentioning he's got an investment or looking to do an investment in a film. So a lot of films are funded by EISs, the arts sector. However, the actual sector is far, far broader the more I've looked into it. But the critical thing is, for an EIS, you can get 30% of the value of your investment as an income tax relief. So what does that mean? If you make a £10,000 investment in that, you are a taxpayer. So the key there is you have to be a taxpayer. So you have to be employed, or you don't just got to be a taxpayer. You will get £3,000 income tax relief on your tax. However, in an SEIS, you physically get that back as money. So you would invest, if it was an SEIS, you would invest 10 grand into the scheme. HMRC would send you a check for £3,000. Your investment is still 10, but you've net only got 7 in there. So as you can see, the huge benefits of investing or understanding what EIS schemes are. Another one is the capital gain on the back end of this. Okay, so as it states there, they've got the disposable relief and you've got deferral relief. But in essence, the capital gain on that is you aren't paying capital gain on the investment. So you are not limited by your capital gain allocation per year. There are some rules and regulations around EIS that has to be held for 3 years. In fact, it says there in the top line, you've got to hold the shares for at least 3 years, then all the gains accrue the exemption of capital gains. So I'll give you a few examples in the next 3 slides, but also why it's critically important is because EIS schemes can be in, shall we say, high risk areas. Okay, they are, they're forward looking. They are looking for tech, arts, travel fall into it. What else falls into it? Wineries fall into this. I found out today, a good friend of mine, massive investment in a vineyard under the SEIS scheme he's got. Invested 100,000, got £42,000 back off the tax man. So he's got 100,000 net in there. I'm not sure why it was 42,000, but he got 42,000 as a check, physical money back in his bank account. So actually his investment was 60, but he's net 100 in there. And that's the power of them. But I did not know that at all until all of a sudden I opened my eyes to start looking around who I knew had invested in this, and it was phenomenal. But also the loss can be covered as well. So as this example says here, you make a £10,000 investment and that company fails. Bearing in mind, so 10,000 investment fails, so it's no longer worth anything, okay? But you could then claim cost relief. So you've firstly already had that 30%, that £3,000 at that front end, haven't you? Okay, when you've made the investment, okay? But you can also claim the loss relief on that remaining 7 of the equal amount to your tax bracket. So in this scenario, 45%, 3,100, meaning your loss in that investment of £10,000 up front, your loss actually nets out at only 3,800. So you can see it's a phenomenally powerful thing or way of investing. Again, I'll kind of caveat this in the fact of what I said at the start of this. We're talking, this slide here is about loss relief. Why I'm talking about loss relief is because it is quite a high, or it's a higher risk, shall we say, type investment. So would I be putting all of my net worth into an EIS scheme? Potentially not. Okay, again, you've got to understand it intricately. If it's a film, for instance, understand the market for that film, who's producing it, who's, that standard due diligence that you have to go through. And at that point, you can probably make an educated decision about how much of your net worth you want to invest. If you are 100% sold that it's going to be brilliant, I still would never probably exceed 30 or 40%. If you want it as a speculative investment and you're not that sold on what to do, and maybe the film, who knows, you know, the film industry has obviously been decimated the past 12 months, then actually you may think, right, I love it, but I'm not 100% sold on it, so I'll only put in 10% of my net worth. An educated investment decision. Inheritance tax, again, these are all, the benefits of this EIS and SEIS are predominantly tax related, but obviously that does equate to hard pound notes in your pocket. So inheritance tax, claiming 100% inheritance tax relief after only 2 years of holding that, that investment. So quick few examples. So I'll give you 3 examples here. So it's when the investment increases in value, like you see there, invested 20,000, tax relief of 30% from that. So you get £6,000 back effectively as a tax write-off. So now imagine your investment's now only 14 grand. I hope I haven't lost anybody. Your investment increases over the next 3 years to 60,000, 0 capital gains, total return 66,000, because you've got the 6 back, you've got the 60 benefit, but remember they're 0 capital gain. Okay, invested, and as it says at the bottom, the caveat, which I'll leave you guys to read yourself. But again, hold for a minimum of 3 years. In this one, investment stays exactly the same. So actually, you've put 20 in, you get your 6 back as a tax relief. The investment does bugger all. Okay, so it's still worth 20 grand after 3 years. You're paying 0 capital gain because obviously it hasn't done anything. But because you had that 6 back, you'll get your initial investment back. You've got £26,000 back. Okay, so actually on a 20k investment, even if it does nothing, yeah, you've just made 30%. Not bad. And the final one is if it decreases in value. So we'll put 20 in, 30 you get back. Remember at the front end, so you've got 6 back. So your capital, your risk capital then, like we've said, is 14. That disappears, and then you'll get your loss relief if you're paying income tax at 4. So again, I'm looking at higher rates, so you get your loss relief. So your return actually is your loss relief plus that 6 at the front end. So your loss is reduced considerably. That's it. That's EIS schemes. Where do you find them? I haven't got them. Cedars. In fact, I was going to share a web page on it. Bugger, I hate having to quickly. In fact, I can't do that. I can do that to you. There you are.
Rich.
Yeah.
Are there any steady eddies on these schemes, mate? Because actually, if you're getting your tax relief back after 3 years, that's better than inflation, isn't it?
E-firm, yeah. So Cedars is probably the best place to go and find them. There's many, but if you go and when you say, is there any steady eddies, Jace? None that would be as a guarantee, but you know, go and have a little look around Cedars. You've got to really understand the sectors. There's nothing that you could put in and say, actually, that's going to do bugger all of. I guarantee it'll do nothing, but it won't lose me money. But actually, it's going to do a hell of a lot better, like you said, than inflation. Because especially somebody like you, self-employed, you get the tax relief. This is one of the better sites to look at, Cedars for EIS. It'll give you all the EIS investments. You know, I mean, when you're asking for steady eddies, Jace, what's the most? South Shields Football Club. Yeah, but yeah, go and have a little gander around for that. But it's a fantastic tool to have in your toolbox. And as I say, it was introduced to me very recently, and then all of a sudden you realise that every man and their dog seems to have an EIS.
We're currently undergoing a class litigation action against mis-selling of EISs. So you have to, so you have to make sure HMRC unregulated all the ones that were previously passed because they were mispassed fraudulently by the accountant selling them.
There we are. So that's why maybe use somebody like Cedars, a very large site. Right. So what I want to do, notes. These are little things, right? These are notes which came from a few questions and things. So as I said, these are little things I fired in tonight, which I want to talk about. So the slides probably make bugger all sense, but it makes sense to me to what to talk about. People were saying, you know, so I was talking, really it's about looking to where you put your investment. Now talk about these pots, okay, and the triangle. If you're relatively new here, I talk a lot about the investment triangle. And again, that will be explained a lot more on the new site. But if you go back to some of the earlier Zooms, you'll hear me talking about it, where there's a speculative tier, a mid-tier, and then the foundation level. And it's about placing investments within these tiers, but it's also in every tier, there are multiple investments. So there's multiple investments in the top speculative again in the middle, and again in the bottom. And it's firstly down to your risk appetite about what you place in what and how many you want to split. So what I'm getting about there is, I personally at the moment, I'm very heavily invested into the crypto space. Crypto really will always sit in that top tier. It has to. Bitcoin, you could argue, is becoming more of a store of value, and it'll trickle down into the more secure middle tier. But technically speaking, it's still a speculative asset. Now, I'm very heavily invested in that space. In fact, I've cashed in a lot of other asset classes in order to expose myself more to that. But that's my risk appetite. So firstly, your risk appetite is very, very important whenever you're looking at any investment. The second is where you are in your life. Okay, and that's the two things I've put there, whether you're in an accumulation phase or whether you're in a preservation phase. Now, the majority of people on these calls, I would suggest, are in the accumulation phase. And that is kind of that, shall we call it middle age, where you are still working, you've still got employment, or you've still got money coming in from some form of source, and you plan to accumulate more wealth. So you're looking from your investments for, you're really looking for cash flow, is one of the main things you're looking for from the assets, or capital growth. But you're not necessarily looking to take an income from it. You're looking to accumulate, to dollar cost average into investments, to add more, to compound, everything with regards to accumulation. The preservation phase comes potentially later in life. What age does that come? That's for you to decide. But it's the age at which you potentially won't be adding more to that, but actually preserving what you have and compounding it in itself. So why that's important? Well, in the accumulation phase, you could be far more aggressive. Okay, you have the ability to be aggressive, and your risk appetite can potentially be a little bit looser in that. Once you get to the preservation phase, you'd be foolish to be doing any of that, because the devil's in the detail. It's in the word preservation. We're trying to preserve it. So you don't want to be going all in on a speculative asset that could potentially lose you 20, 30, 40, 50, 60, or 100% of that investment when you're in the preservation phase, because you're doing exactly the opposite. You're no longer preserving it. Okay. So it's about understanding your time frames and your time horizons and where you sit in that speculative thing. And that's something whenever I kind of work with anybody on this, I talk to them a lot and I find out what they want, because you might be 20 years old, but have a very risk averse attitude and actually want to accumulate maybe for only a 5-year period and then preserve for the remainder of your life. That's absolutely fine if you can accumulate in that short period of time. But a risk-averse attitude for a short period of time won't allow mass accumulation. If you have a short period or a short time horizon, then you need an aggressive approach for accumulation to then preserve for the longer. If you have a longer time horizon, so I'm in accumulation phase for the next 20 years, okay, I don't necessarily need to be as aggressive with my investments. Or I just go balls out from day one and go aggressive and accumulate to 10x. But that, like I say, it always is down to your own risk appetite. But it's about your time horizons and where you are in that. So it's about looking at yourself and inside of yourself, okay, about what you want to achieve from this. And the next thing comes on that when I'm looking at the time horizons. There was an interview done quite recently. It's on YouTube, where 62% of millennials who were invested, okay, said that their portfolio consisted of only 2 things, Tesla and Bitcoin, okay, which is quite an interesting statistic. And also there was another one done, which I actually tried to find quickly tonight. Again, bearing in mind that these notes always come up. They're like, oh, I want to talk about that. I want to talk about that. There was a stat again about those who are invested or invest, where they will be placing their stimulus check. And it was probably a similar kind of split, about 60, but it was predominantly 60% into Bitcoin, the remainder into Tesla. And we'll talk about the Tesla stock in a moment. But that's the attitude of the millennials. So imagine a millennial, 62% of those who invest are invested in those 2 asset classes, or predominantly in those 2 asset classes. And this, I remember I watched this interview and initially I was like, it's a bit risky, isn't it? But as the interview went on, he openly said, you know, look at the time horizon that these individuals have. And actually, it's a fairly solid investment. You may not have bought at the right price. You may not have bought at the bottom. You may not be buying at a discount. But in 50 years, they'll be very, very sound investments if they're not touched. And it is a very, very true thing. You know, I look at my investment strategy. I would like a very heavy holding in Tesla in time, not right now. I'm trying to pick a better point. Why am I trying to pick a better point? Because I don't have a 40-year time horizon. My wealth accumulation to wealth preservation, I look potentially at about 20 years. So I'm trying to pick a better point to enter. But the point is that is the attitude of the market today. Is it a good thing? Is it a bad thing? It potentially short-term bad thing, long-term good. Look at your own time horizons. So another question I got asked was, why do I still hold gold bullion? Okay, and I do still hold some gold. And it's about understanding that, you know, why do you hold gold in the first place? That's the key. Or why do you hold silver in the first place? And again, it's about that diversification. So I spoke last time about over diversification and not to be over diversified, and that's very, very key. But to hold some gold, and I will always, always emphasize that physical gold for me is better. However, it is illiquid, like it says there on the bottom. It is not liquid, but it's a hedge against the fiat currency, our current currency. But so is Bitcoin, really, and so is crypto, kind of fitting into that sphere about a hedge against. So maybe my bullishness, I'm still exceptionally bullish on both gold and silver, but I think short term more money may be going to the Bitcoin sphere than potentially gold. Let's say if Bitcoin never existed, where we would be right now with what has gone on in the world, gold and silver would be through the roof, because a lot of money would have been piling into them as the hedge against changing bond yields and the other like things which affect the markets. But gold itself it's not pegged to the dollar like it says there. In 1944 in Bretton Woods, it was pegged to the gold, where an ounce of gold was $1. Now that disbanded in 1971, and when other currency became backed by the gold and precious metals. Now, the rumor, if you've read books like Aftermath, Jim Rickards, if you haven't read it, please do go and read it. Fantastic book. Talks about, you know, if the US dollar in our lifetime, okay, we're not talking in the next 6 months, and that's something else as well. I encourage, you know, modern investors on the Instagram, the TikTok, all of the social media platforms are after the quick wins. We all love a quick 100%, don't get me wrong, but you should also be looking for those slower gains as well. In our lifetime, I do see that the US dollar will not become the reserve currency, and it will go to another fiat currency, I feel, before it ever goes to maybe a digital or a crypto. So I think there is this intermediary. Again, this is my opinion. It's not just mine. I do share the opinion with a lot of other people. But if, for instance, it's the yuan, so the Chinese yuan became the world's reserve currency, and they backed it by only 10% to gold, okay, that would actually put gold at 40,000 an ounce. So by holding a small amount of gold, a small percentage of that portfolio, all you're doing is you're hedging against the currency around the world. It's a good investment as well, okay? You're not going to touch it. Where do I hold gold? If I'm honest, I hold gold coins personally, but if I'm brutally honest, what I'm holding more or pushing more of my investment towards is gold. You won't be surprised to hear it, watches. Why? Because one, I'm getting the investment value increase in that physical watch, but also the physical metal that the watch is made from is going to double. So the one I put on the other day, that Patek, you know, instead of it being 74,000, which is what it is, currently market value of 150, the physical item cost for that watch will rapidly, if the gold goes up in value, will also increase, which will also increase the grey market value. So I hope that kind of makes a little bit of sense. Why do I hold as much crypto? So hopefully what I'm saying, guys, I'm just rattling through points which are questions which I get asked. So please do kind of pipe up, I think. Oh, but come off mic if you've got any questions. But why do I hold so much crypto right now? So it's about looking at, in fact, let's just put up all of the things here. It's about looking at multiple streams you have in your life. So those in the property world will have heard the term multiple streams of property income 1,000 times before, but it's about multiple streams of income. So not that single leg of the table, like I've referred to many times, being the job, okay? You need to be building up the other legs. Now the legs initially may be tiny little teeny legs, okay, because the leg in the middle is huge, which is your job. And this is quite often what stops people investing in other items, because they're like, well, what's the point in putting it into the stock market? Because it's going to make me, you know, a tiny amount of money. But it doesn't matter. If you've ever seen the compound curve of Warren Buffett's net worth, it was relatively flat until maybe the last 5 to 10 years, where it obviously exponentially grew. So a lot of people potentially will think, well, I don't want to put my time and effort into growing another small leg of this table. I'm just going to use that money to go on another holiday, because the smallness of this leg compared to the big one in the middle is relatively insignificant. But it's about growing multiple of these small legs, whether that be stocks and shares, whether that be crypto, whether that be precious metals, whether that be asset. For myself, that is, as I say, personally watches, whether that be growing a business, you know, or doing a side hustle, shall we say, if you are in employment, looking for those, or property, looking for those small legs, where if the big leg in the middle did ever get destroyed, the job, all of those small ones collectively would prop up the table. But we've now got this table with 10 minuscule little legs around it. So what we've got to look at is, we've got to look at two things. Now, a lot of us will have heard of return on investment, which is ROI, but we also need to look at return on time invested, as well as return on capital investment invested. And crypto for me right now is a very short return on time invested for almost an exponential return on investment. So my time investment is relatively little for the research element only, but the exponential growth. So I'm putting a lot more of my resources into this, because in a short period of time, I can make a larger gain. So that leg, for instance, can grow. So now I've got my lopsided table, but that's grown. Now, when the crypto sphere ends, let's call it December next year, and I've released that capital, that crypto, the leg's still there, but my time, my ROTI, my return on time, is going to divert somewhere else. So where will it divert? It may divert to property, it may divert to stocks and shares, it may divert to growing another business. Okay, so you've got to always look at being greedy in the asset class, or one of the multiple streams, if you are confident about the return on time invested as well. So I hope that makes a little bit of sense. And also you've got to look at that time as well when I talk about time horizons, and what is the return on investment vice time horizon. Like I said then, if you see at the front end it's 100% return, but the time horizon 20 years, consider whether that's the asset class you want to get into. So again, it's understanding your time invested vice, as well as return on investment, not just return on investment. So for me with crypto, I'm going to be greedy for the next 12 months because it's a short time window. So fast, aggressive return on time, high return on investment, then cease all activity. That's my personal play. And that goes to the third point down, which was asymmetric trades, where you're always looking for that R multiple. This was a friend of mine was talking about this today, and he was saying, you know, the asymmetric trade is simply that, it's a larger R multiple. So he did it as a trading analogy. You know, if you have a 30 pip take profit and a 10 pip stop loss, you've got the potential to make 300%, okay, and only lose 100%, or 10% loss, 30% gain. So the gain, the risk to reward, the gain is always far greater than the loss, and that's what you should always be looking for. I don't know why I've put the crypto tax in there. That was one that literally came in. Where do you go for crypto tax? I've looked around. There's been a lot of apps and what have you that do this. Again, that's simply the one I've now settled on and use, which is recap.io for your crypto tax. It is brilliant because it offsets a lot of losses which I'd previously had from kind of 2017, 2018, when I did lose money in crypto. So those people who are in the crypto space, you know, do try and get your tax affairs in order. There are 1,001 apps out there that will now do it. That's simply the one I use. Right. That's that. Right. Dollar cost averaging. Right. Very quick one on dollar cost averaging. Guys, dollar cost averaging is exactly that. You're averaging in. Okay. So what dollar cost averaging strategy do I use was the question. Now, this is you'll find this on the internet. That's obviously where I've pulled this graph from, about what is dollar cost averaging. People are talking, there's using 5-day moving averages, 20-day moving averages, and these complex pieces and that's all well and good if you understand that. But dollar cost averaging, guys, if you are in an investment, whenever you are dollar cost averaging, I've spoken about it many times before, that you would have a pot of money where you would split up into, say, 5 pots. And to dollar cost averaging, you would deploy pot number 1, then pot number 2, 3, 4, and 5. But it's like, well, when do I deploy pot 2, 3, 4, and 5? And for me, there's 2 times to do that. You either simplify matters completely, okay? And if I was doing this simplistic approach, I might have more than 5 pots. I might have, say, 10 pots, okay? So if I had £5,000, I've then got 10 pots of 500 quid. My dollar cost averaging strategy would be £500 every Monday morning, bosh, in there, irrelevant of the price. I'm just going to keep doing it. And if you are consistent doing that, it has been proven over time that actually does give significantly better returns than trying to time the market. The other one is you have a smaller number of pots, for potentially, say, 5 in my example here, and you always buy the dips, okay? Market dips, buy. Market dips, buy. But what's the danger of that is when it dips, you never know where the bottom is, because you may buy, okay, and this, so let's look here, you may buy, oh, market's dipped, I'm going to buy at 31,000 here, but the market keeps dipping. So do you put in a second pot? Who knows? So my personal strategy for dollar cost averaging is I will try, okay, and be regular. So I have a certain amount that I will allocate into each pot on a regular basis. However, I will have an element of what I refer to as dry powder, an additional pot of money which is sat there to kind of take advantage if an opportunity presents itself. If something crashes overnight, which is kind of unexpected. At the moment, a Bitcoin sub 50,000, boom, I'm going to invest in it. Another coin sub that. A stock that gets a bad, what was the classic one not too long ago? The last one I really jumped in on was probably the Boohoo, those people who were around at that time. A really, really bad case, fundamentally in the press, bad press, it crashed overnight. So I had a pot of dry powder that I could throw in there, okay, very, very quickly. So I couple it with a regular investment every week, at not necessarily the same time, but around the same period every week. And right, last few slides. And then we'll have a little Q&A. Right, ratios. A lot of people have asked me about ratios. Now, ratios is a play that I always use. And I use ratios mainly. I'm using it quite a lot in a few other plays at the moment. I play the Bitcoin Ethereum ratio quite heavily, okay? And I also play the gold and silver ratio heavily. But I'm also playing a few other ratios to Tesla at the moment because I do want to, I view they are, well, I think they're now on a bit of a melt up, but I'm watching closely because I would quite like to be in Tesla around the 400, 450 mark. And maybe some of the other tech stocks as well. But why do I play ratios? Right. So this is the Bitcoin Ethereum chart going all the way. So this is this is only 12 months worth. Okay. Obviously goes back a lot further than that. But you could say, well, why are you buying Ethereum when you want to hold Bitcoin? And that was the question. Okay. And the reason simply is that on the chart, on the ratio of the two, okay, it's relatively low. Okay, so it's 0.05 at the moment. I know it says 5.01, but it's 0.05. Okay, now I look at this and I say, right, well, here is 0.07. Okay, that's a reasonable target, or we could go back up to some of the all-time highs in 0.1. So if I just buy Ethereum, and actually with the altcoin cycle, the ratio will start to increase. When it gets to a set figure, I've always said mine is 0.07, okay? I will simply switch my Ethereum back to Bitcoin. So what have I done? I've stopped valuing my investment in dollars or pounds, which is the common misconception. People will go, what's my Ethereum worth? My Ethereum worth is, $1,400. My Bitcoin is worth 55,000. But you need to know the correlation between the two, because my play is never to take Ethereum back to dollars. My play is to take Ethereum into Bitcoin. Now, to give an example of that, the way I have played my crypto, I will probably increase my Bitcoin holding. If it gets to 0.07, I will increase it by 10 Bitcoin by playing the ratio rather than just investing in Bitcoin from the outset. So an intricate understanding of the ratio is quite kind of key. And I also do that on the gold silver ratio, which a lot of you have heard me talk about before as well. The gold silver ratio is exactly the same, that silver is at an all-time low against gold. And again, in time, it will level the playing field, and the ratio will rise in comparison to gold. At that point, I won't go silver back to pound coins. I'll go silver to gold, and then I will hold gold forevermore. So that's how we do ratio plays. Right. Been a long one. It feels a long one. Has it been a long one tonight? Well, it hasn't been too long. But hopefully there's been some value. Right, last one is about value investing at the moment, recovery stocks. And the reason I'm bringing this back in, it actually came after talking to Tasha yesterday, because I was talking to Tasha, she's very intricately involved at the moment in, I'd say, the crypto space. But, you know, I emphasize to everybody that you've still got to have this open mind, because it isn't going to last forever. And when it doesn't last forever, when the bottom falls out of it, what are you going to do with that investment money? Where are you going to place it? It's pointless waiting for that to happen and then deciding where you're going to invest it, because you may well have missed a lot of that bow wave. So I talk about being ahead of that wave. So start looking now about where you're going to put it, or divert. You know, you should all have, if you are in crypto, you should have a stocks and shares ISA at least. Okay, you should have other investments at least. Nobody should be all into that asset. Just because it's doing well at the moment does not mean it is going to continue. So over the past period of time, value stocks have been doing very well. Now that is the chart of the S&P 500. So the 500 top stocks in America, or globally really, because they're in America. And the line on it is the mean. Now, people may have heard the term that, you know, reversion to the mean, okay? And the reversion to the mean is like, you know, if you'd invested back in there in 1994, okay, the market is good. Mean has gone up, okay. Yes, it's been above that line considerably back in 2000, and it's also been considerably below that in 2009. But you can see it tends to revert back to that mean, and you can see from kind of 2017 through to almost a COVID crash, it hovered on the line, and that's the healthy market, is hovering on the line. But what you see now is we're well above the line. Not as above the line as we were potentially in 2000, but we're above that mean. And at some point, we will have a reversion to that mean. So when we look at the makeup of the S&P, you'll see there that the makeup of what the physical 500 companies that are in that are predominantly dominated by tech. And we all know that. The FANG stocks make up you know, a huge portion of that. The tech stocks for a period of time were in excess of 50% of the S&P, okay, which is ridiculous. That's where they were valued. Pharmaceuticals have now started to creep back, and so have the financial, and a couple of the other sectors have started to creep back to take dominance. But like you can see there, tech holds a dominant portion of that. Now what happens is, in times of Shitsville, okay, last year, okay, people, human nature, and this is just what happened, not where we're going. I'll get to where we're going in a moment. People put their money into safe havens because tech is the backbone of the S&P. So that's why throughout that last period, and still to this day, the techs are booming. Your Teslas, your Apples, your Netflixes, your Apples, okay, your Facebooks, actually, the typical FANGs, they have all boomed. Those value sectors have absolutely skyrocketed. And because that's where a lot of that money went, okay, because they were the dominant sector of the S&P. Now, we're getting to this point, like you see here, where we are well above the mean. So what that's saying is the value in those companies, done by the PE ratios, the price to earnings ratios, which are all sky high for those companies, the value in those companies is starting to get less and less and less. So you're getting less bang for your buck. Okay, again, let's roll back a couple of years, invested in any one of those tech stocks, you've had a hell of a lot of value out of the 2 years that followed. But now they're getting out as much as humanly possible. Jace, can you just mute yourself? I think it's you. I can't mute you for some reason. 1 minute. I can't mute him.
Apologies, mate. Yeah, it was me.
Go for it. So the value is getting wrung out of it as much as humanly possible. So, you know, they're not necessarily, like I said earlier, 61% of millennials, they're invested in Tesla and Bitcoin. So it's not necessarily bad investment, but you are buying at the top of the sector. There may still be more to go. And those people who, you know, I'm a massive fan of David Hunter. If you don't follow David Hunter on Twitter, do so. He's probably the man who's been the most accurate, that this melt up is continuing and continuing and continuing. And I do see tech melting up potentially a little bit more. But right now, the value for me is gone and I am out. So where does the money go when the value's gone? It goes back to those kind of those beat up, those decimated sectors, those places where you know, people think actually they're shot. It goes back to those safe havens, shall we say, of which will always recover. So what will always recover? You know, it is back to the banks, the travels, the energy, things with the big brand recognition. Okay, they'll always be there because demand will never go away. You know, so like, you know, you look at the travels right now, they haven't boomed yet. There's still a huge amount of opportunity in the travel sector right now. From the cruise sector is one that I've always loved. You know, I said Norwegian cruises a long time ago, and unfortunately I got out of Norwegian cruises at my target. I wish I'd still been in it there. That's why I've put baby boomers at the end. But look, you know, it's those recoveries, and that's where I will be looking, and that's where I am looking, you know, those classic big brands, like on the last one, your Coca-Cola, your, as I say, your travel stocks I'm now looking at. The banks I'm less likely to jump into, but the energy sector, okay, the electric market, the EV sector, those recovery stocks, but the bigger plays. And they are the ones when the techs, those values get wrung out and we have a reversion to the means, it's the time for the recoveries to shine. And Virgin's a perfect example. You know, I spoke there about NCLH, Norwegian Cruise Lines. I still even like Norwegian Cruise Lines where it is right now. I don't want to get back into it. Again, those of you who've been with me from the start, why do I not want to get back into it? Because I always state, when you leave a stock at your target, don't FOMO back into it. But I'm also adult enough to say when I've made a mistake, and I feel I made a mistake by exiting. It was at my target, so it was a valid reason to exit, but I now see it having a hell of a lot more of an upside. I haven't bought back into Norwegian cruises, but I do still like it. Virgin and the baby boomers, I put that there is because Virgin brand recognition, and you simply look at what Virgin has done over the over their entire career, okay, is look at those sectors and work with the baby boomers. And I put the baby boomers up there because I feel that's something that when we're looking at the cruise liners, when we're looking at the travel sectors, actually baby boomers, okay, for those of you who don't know the baby boomers, post-Second World War, massive boom of babies. Now 50%, now baby boomers are coming to retirement, okay? 80% of all baby boomers, their average asset, their average worth, most of it being in property and businesses, is 1.2 million. So 80% of baby boomers are technically paper millionaires. They're going to be retiring, okay? In this period of time that we're in now, they're going to be retiring. What they're going to do? They're going to look for the cruise liners. You're going to be looking for your travel. They're going to be looking for those sectors where they can retire into. And that's, if you look at Virgin's business model, and this has been said many a time, and Richard Branson openly says it in a lot of his books, that he built his entire business empire on the baby boomers. So he went from, because he was effectively one. So he went from university magazines, records and music, through to Virgin Atlantic, flying across the Atlantic, really innovative, getting himself out there traveling the world, into banking, into cruise lines, and then into care homes. So his entire business empire has followed that sector. So all I'm doing now is I'm looking away from the value stocks, which have pretty much had the value wrung out of them, i.e. that tech sector, and I'm looking into where I will go once you know, I'm still investing in these sectors now, but I will go heavier into these sectors when I pull the majority of my investment out of that crypto sphere. So hope that makes a little bit of sense. Right, one last slide for you. Some people like some swing trades. There you are. So that is a list of swings which I am making probably over the next month. Okay. Where will I put these? So that is it. That is the list. We're no longer putting these. We'll decide whether I'm going to put these into the Facebook group or whether these will just go on Telegram. But what is a swing trade? Okay, understand the rules of swing trading. A swing trade is a short-term play. Those of you who heard me talk about this before, we did it in January, and it seemed to get quite a good reaction. But they are not long-term holds. They are relatively short-term. But what is a swing trade? It could be between a day and 6 to 9 months, realistically. And I'm looking for the price. So I've got a dedicated price buy target. Okay, so let's look at the top one there. You know, they are all the tickers. Okay. And they go from everything from, you know, I've got female Viagra in there as one of the tickers, pharmaceuticals. I've got syringe production. There is EV batteries. So all sorts of little bit. I was going to put the detail of what each of the companies were, but by all, you should be doing the research yourself. But these are ones which I'm looking to swing, not hold long term. So their current share price is there as of yesterday when I put this together. That is the current share price, the target buy, target sell. I won't be placing stop losses on these. Okay, that is a percentage stop loss, but that allowed us to give a risk to reward. So the risk to reward, you might say, oh, 1.7 at the top, 1.57. On a swing trade, we're not necessarily looking for a minimum risk to reward. Okay, i.e. you might always want a 2-to-1 risk to reward. When I'd look for that, that's always on a spread bet or a trade. This is a swing, subtly different. Those of you who understand it and want to play it, please do so. Those of you who want to monitor it, put all of these into your Trading 212 or another said app and just watch it. Let's see how we do. Let's see if I can do a double on this in a month, okay? Because technically, okay, it could well do so. Let's have a little look, shall we? But we'll put that somewhere. You can look at it, do your own research on everyone. Not a single word of me saying that is advice to buy those stocks at those prices. That's simply what I will be doing. Will I enter everyone? Potentially, potentially not. But they are the ones I've done my analysis on, come up with those target buy prices, come up with those target sell prices, and feel that the swings will work. That, ladies and gentlemen, was my last slide. So I'm going to stop sharing. Right. Oh God, what have we got there? A few little questions. So let's have a little look at the questions there. Hope that was useful anyway. Right, XRP. Crypto question, no view on it whatsoever. Well, I have got a view on it, but I have got a view on it. What do I think is going to happen with XRP? I think it's all going to be washed. So XRP, for those of you who don't know, is a cryptocurrency called Ripple. And it's having a case by the SEC, so the Securities and Exchange Commission in America, to determine whether it is a currency or an asset. When the court case was announced, it crashed and it hit the floor. If that court case is thrown out, which rumor mill has that it will be, and hence why XRP has already risen to pretty much its pre-crash levels, it may well skyrocket. If I'm brutally honest, I'm not a massive fan of Ripple anyway. I'd rather deploy my money elsewhere. The only reason I'd be putting money in it is as a gamble. I put some money in it because if they win that case, then it will probably skyrocket. If they lose the case, it'll potentially half, third, go to zero. Okay, but it as a gamble. I don't really want to hold it, but that's my view on XRP.
Rich, when did you say the hearing is there, Rich, for this set?
Well, it's been going on. They've had interims, they've had preliminaries. God knows, it's been going on a long, long time. Don't short it. Yeah. I just, to be honest, I don't know, Grant. I'd have to dig into it. It's not something it's not a player that I would want to play, but that's the history behind it. Yeah, Mark's little Cats has used Seeders for EIS schemes and Crowdcube. So there's another one for you there with regards to that. EIS and a SAS. Oh, Alex, I don't know the answer to that question. Howard, do you know the answer to that one?
Well, I mean, if you're doing it for a tax, to get around tax, well, you're getting your tax anyway, aren't you?
Yeah, it kind of makes no sense, does it?
It makes no sense, no.
Yeah, Richard Sandy, as you know, I've got my SAS and it would be absolutely pointless. It would be pointless.
Yeah, it's a pointless exercise, to be honest, because you're saving tax where, you want to be
There's
using our income stream to be...
Yeah, there's no tax liability whatsoever as long as you follow the rules in the SAS.
There we are. Fantastic. Steve Curtis, where do you buy physical? Right, so I bought physical gold and silver from Atkinson. It's the latest one I used. Atkinson was the cheapest. There's bullion by post, there's the Royal Mint. You'll find that those two are fairly expensive. You'll be lucky to get any silver. If you're buying bullion, look for a Britannia coin. The reason being is Britannia is classed as legal tender and hence capital gains tax free on that one. But I'd say they're the three that I would. Atkinson was the last place I purchased and it was far, far cheaper. But I say it's got to be a reputable source is what I should be saying. Don't be buying off eBay or anywhere like that. The gold souk in Dubai should have been a good place when you're out there. You can get some good silver deals out there. But Atkinson, Royal Mint, bullion by post. Mike, you're asking about watches again, aren't you? Should I do a quick? I could do a quick 2 minutes for those who want to talk watches at the end of this.
You want to, Rich. You know you want to.
Why 2 boxes are yellow? Explain why 2 boxes. Kane to me. Oh, yeah. Sorry, Kane. Too late. It's gone. The 2 boxes, they didn't have a sell price. I wasn't right there. There we are. Somebody else has asked it. Manus, you've asked why are 2 of the target sell prices on my swings in yellow? Because they didn't have sell prices. Okay. Because I would want to see how far they swung. I'd probably be looking, they are a bit higher risk, those 2. But that's why they didn't have sells. Why did Coinbase crash? Liquidity is generally why the exchanges seem to crash, Callum, and also mass users on them, if I'm brutally honest. So you don't want to be stuck in if you're trying to exit a crypto at the top of the market, you do not want to be in a position, which is why you should have an exit plan. You do not want to be in a position where the exchange lets you down for potentially 24 or 48 hours. Yeah, so that's why you should critically have an exit plan. Why do I go to Binance? Because Binance is the biggest exchange. Coinbase and Kraken combined are not as big as Binance. So that's my preference. I know a lot of people are loyal to Coinbase. I know Andy, who's just mentioned there about his SAS, he's restricted to Coinbase because that's what his SAS administrator insists on. So there are other reasons people have to use other platforms. My preference, as I say, is Binance, simply because of its size, the level of liquidity it has, and the range of coins that it has on it.
Rich, I just had my SAS people, administrator, said that I can invest in Kraken, just for anybody that
Oh, yeah.
Yeah.
There we are. So they've come up with a different administrator.
Yeah, we have come up with a different one. So just thought I'd mention that. Although there's some coins that are not available on there, but yet. But yeah, just thought I'd mention.
I've got a meeting tomorrow with Paul.
Elroy, yeah. Elroy.
Paul, who was on here, who had that specific point about my crypto in Binance and BlockFi, because I would like to move. I would like to keep mine staking. So I've got a meeting with him tomorrow afternoon, and let's see what result he's found for me on that one. He's gone to a very large range of SaaS providers, so we'll see what he comes back with. That's tomorrow afternoon.
Okay.
Right, guys, I'm happy to stay on. If people want to talk watches for 5 minutes, and I'll do another session some other time, because Amy's next door, and I think she's champing at the bit for me to go through needs. But if you want to stay and listen to watches, you can please do so. If not, then thank you very much for this evening, and I will get the swing list up there sometime with the rules which I use for that. But I'm going to talk about watches now because it's like up there with one of my favorite topics.